My name is Will Holland. I am the Chief Financial Officer at Fastnet Oil Gas. I'm going to talk to you about the company and where we see ourselves at the moment and what our plans are going forward. I only have 15 minutes, so it's going to be a little bit rushed, I'm afraid. There's plenty of information on our website, and the presentation which I'm going to give at the moment, I'm going to skip through quite a few of the slides and just try and hit the high points of each one. Please go to the website and you'll find a more extensive presentation there. We also have a stand here, and you can please feel free to visit us here, and we can talk in more detail there as well. So Fastnet is an upstream oil and gas exploration and appraisal company. First, obligatory disclaimer. We have assets in Morocco, both on and offshore Morocco, and in the Celtic Sea offshore Ireland. Today what I'm going to talk to you about is what our strategy is for the company and how we execute on that strategy, and to show that we've got the right skills within the company and on the board to take that strategy through. And talk about each of the assets individually, where we are with each one, and what the plan is going forward. Just as a quick overview, we do have $20 million of cash on the balance sheet, and we have a relatively low G&A burn compared to the rest of our peers. It's $2.5 million per year. So we have plenty of cash. We're fully funded for our commitments, and we have a number of projects which we hope, and I will demonstrate during this talk, are going to be game changers for us and really drive the value of the company. So what is our strategy? The strategy is to acquire large interests in oil and gas exploration and appraisal opportunities. Our focus is predominantly Africa and Europe, and we then will analyze those through either desktop G&G work or potentially some seismic, but then we'd look to farm them down. So when the big cost tickets come across the desk, which is typically drilling, we look to farm down for a carry for those drilling operations. And then upon success, we would then look to monetize those assets. So we're not looking to be a full cycle E&P company. We don't want to take assets through to production. We would rather use our expertise, which is in the earlier stages of exploration and appraisal, and then monetize the assets once the large portion of the risk has been removed. So who are we, and how do we think we have the skill set to do that? This is the board. Paul Griffiths is a geologist. He's been in the oil and gas business for his entire career. He's been in a number of companies which have successfully discovered oil and gas, and he is the driving technical force behind the company. He does the G&G work. He appraises the opportunities, and has a track record with his previous companies where he's done similar things before. Carol Law is also a geologist. She has been in the industry for a number of years as well. She was involved with Anadarko in the east coast of Africa, so she's experienced in farming down assets. So Paul is the element which looks at the opportunities. Carol also does that, but she's very, very involved in the sort of farming down process. So we know what large oil and gas companies want when they are looking at new opportunities. Carl Friel is a consummate entrepreneur. He's been involved in a number of businesses, not only in oil and gas, but very, very entrepreneurial individual. I've been in oil and gas my entire career. Started off as a frac engineer, went into banking, and now I'm a CFO. Slightly strange route, but I've also bring a slightly different skill set to the table in the fact that when I was in banking for 7 years, I was involved in a lot of valuations. I used to invest purely in upstream oil and gas opportunities, and structured a number of products as well. So, but between us, and then Michael Nolan as well was involved in Cove, which I'm sure many of you will have heard of. That was successfully sold a few years ago. So what are our assets? Onshore Morocco, This is an appraisal asset. It's a large field. It's a large license, 14,500 square kilometres, and it's a discovered resource as well. So this isn't exploration. There are 7 wells that have been drilled. Actually, that's the fiscal regimes. Here's the one. There have been 7 wells drilled on this license area, of which 6 discovered gas. Of those 6, 2 of them had well tests on them. That's SBK1 and TE5. Our focus is on the TE5 structure. So this is a structure which has been mapped. There's 3D seismic on it, and there is, importantly, a well test on it. So this is the structure map that shows the P10 volumetric, which is 1.4 TCF of gas in place. We think that with a reasonably conservative recovery factor, we should be able to get just under 900 BCF of gas out of that. The discovery well was down here, TE5. That well flowed at 1.5 million standard cubic feet per day. That is not commercial. That is not a commercial rate. We need to demonstrate that we can get commercial rates out of that. But all analysis that we've performed indicates that should be achievable. That original well, which was drilled back in 2008, was drilled with heavyweight mud. The reservoir is overpressured, so when they reached the top reservoir, they got a gas kick. They weighted too heavily. They ended up with a skin of over 30. They then performed a frac job, which was ineffective. There was then a fish stuck in the hole, which meant that they could only perforate 50% of the reservoir, and then importantly, they couldn't displace all of the completion fluids, so they had liquid loading in the well. When you take all of those factors into account, you say, well, what should have this well produced if it had been completed correctly? You get an analysis that shows it should have produced at over 9 million standard cubic feet per day. We believe that commercial rates for this field, and that's just for this core area this is the P50 area, we think we can, commercial rates are sort of 3 to 4 million standard cubic feet per day. And we think that there's a 50 to 70% chance of success that we can demonstrate those rates. If we can do that, the economics for developing this field as a gas-to-power project are excellent. At the moment, we're actually modelling it to assume that we have to connect into the Maghreb pipeline. This is a pipeline that goes from Algeria and connects into Europe. So building a 120-kilometre pipeline is a more expensive solution because we would have to pay for that. But the conversations that we've had with the government, that they would actually take the gas from us. Morocco is very power hungry. They import 95% of their energy requirements. And this is the most developed gas to power opportunity that they have on their books at the moment. So we've been given a target by the government. If we can prove that we can deliver 60 million standard cubic feet of gas per day, they would build a power plant there, which would mean that our capital requirements wouldn't be as high. Now, the economics for these projects are stellar. As I said, if we just assume our P50 area, you've got an IRR of over 60%. So that doesn't include this larger area to the north. And then also there's another gas discovery down here, and we can't see closure on that. That means we don't know how big it is. It could be potentially very, very large. So that's excluding that as well. So we think a very valuable project. We're looking to drill a well at the beginning of next year, which would prove that up. We also have offshore Morocco. For those of you that know the company will be aware that we drilled a well offshore Morocco with BP, Cosmos, and a company called SK Innovation. The well did not discover commercial volumes of hydrocarbons, but what it did discover was oil. So this is a picture of the cores, and we have fluorescence here, which shows that there is live oil in the cores. So going back to the seismic, this is the pre-drill analysis of what this pink is a salt diaper of what the salt looks like, and our target was the lower Cretaceous. Cosmos's target was the upper Cretaceous. There was nothing in the upper Cretaceous at all. There was no sand development. And the analysis of the Sorry, and the pre-drill estimates were not correct either. This salt was actually came across much more than we thought, and we actually penetrated the top just after we clipped our target. So our target was at this pinch out of the lower Cretaceous. That's where we took the core samples, that's where we found the live oil, but we didn't find enough reservoirs to prove commercial volumes. It was a very thin slither of reservoir. So what would you do next? You'd probably want to come down dip to try and find a larger reservoir package. We are carried in the next well, so we didn't pay for this well. Our interest was carried by SK Innovation, up to $100 million gross cost. We have a carry for the next well as well. There is no location that's been identified yet. That's currently being assessed by the partners, but we hope to be able to announce something shortly. Celtic Sea, I'm aware that I've only got 4 minutes left, so I'm going to have to start rushing through this a bit. This is all of our acreage here. We're currently farming this down. We have a large interest in all of this. Last year we shot 3D seismic over Mizzen East, and over Kinsale, deep Kinsale. We had a technical workshop at the beginning of the year. We invited 27 oil and gas companies to attend that. These are all major oil and gas companies with very strong balance sheets. These are majors and super majors that everybody would have heard of. At the moment, after the end of that technical conference, there was over half of them signed a CA. At the moment, a significant proportion of those have completed their technical analysis, and we are now in the commercial discussions with them. Now, that's no guarantee that we're going to get a bid. They may all walk away because they have other competing opportunities globally for their exploration budget. But we are confident that we should receive a bid with one or a number of them before the end of the year. That would involve us hopefully receiving a good portion of our back costs. We spent $22 million doing that seismic last year, and we would hope to be carried on the well as well, which we'll see. This is some of the seismic in Mizzen. This is the seismic over this area here, which shows very strong hydrocarbon indicators, bright spots, gas chimneys. This is the deep prospect, so that's this one here, deep Kinsale. We have the rights to below 4,000 feet, which is this bit here. And here we see a very large prospect. There's already been a discovery drilled over here in the late 60s. So we know there's oil and gas here. Providence proved that these wells can be flowed at commercial rates. Importantly, our seismic shows that there isn't any compartmentalization in this area, which is a problem that the region has often been plagued with. But as you see, there's east-west faulting, but there's no north-south faulting. So we think that the majors are very interested in that for this reason alone. Yeah, so here we are. This is the important slide. We've got 2 minutes to go on this one. What is the value proposition for this for buying this stock? As I said, we've got $20 million of cash on the balance sheet. That's worth 3.5 pence. We have a carry remaining offshore Morocco with BP, Cosmos, and SK Innovation. That's worth $12.5 million, equivalent to 2 pence. Our stock has rallied a reasonable amount over the past week, and we're currently at 8 pence. So that means that the market is valuing our other 2 assets at 2.5 pence. Tendrara is the onshore gas field. 21 pence is a risked view of the P50 area. That's the value of the risk view of the P50 area, assuming that we farm down 50%, and then it's risked down based on the chance of success. It's not going to be worth 21 pence. It's worth more like 60 pence to us if we can prove we can get commercial rates. So we hope to be able to conclude a farm out of that, and we hope to be able to be carried on that by the end of this year. Those discussions are underway. The Celtic Sea, we're valuing that at 15 pence. That's 15 pence is based on an independent analyst's view of the risk valuation of our Celtic Sea portfolio. Again, it's not going to be worth 15 pence. If a discovery is made there, it'll be worth multiples of that. We are, as I said, well progressed with our discussions with these majors and super major companies. We spent $22 million there. If we get those back costs back, which we hope to do so, that's immediately worth another 3.5 pence from a cash value, and then any carry on top of that. So these are the two real value drivers over the next 4 to 6 months for the stock. We hope to be able to announce both of these by the end of the year, at which point the company will be carried on their onshore Morocco operations, offshore Morocco operations, offshore Irish Sea operations, and we should have potentially up to $40 million of cash in the bank. And we are looking at other projects. So we'll be in a very strong position at that point. Thank you very much.